fire for the whole world means a tool through which that you can cook something or you can light up something. But fire for us means financially independent and retire early. Do you see that there is an upward trend in folks in their 25s and 30s that they want to retire early?
Definitely, I think because of a lot of content being put out around FIRE, many people have started to build their own targets, right? They're in 20s, which is fine, which is not bad. It's not practical in my view to get to FIRE by, let's say, 30 or 35 or even 40, right, for that matter.
What is the practical timeline for these folks to attain FIRE? Hi folks, welcome to Ditto Insurance. I'm your host Shashank. Today we have a very special person. He's a full-time content creator, he's an investor, and he's a man on a mission to be financially independent by 2030. We've also worked with him in the past and we've had a great time. Ladies and gentlemen, I give you Rahul Jain.
Thank you, Shashank.
Hi Rahul, and welcome to Ditto and Bengaluru. So how are you feeling today?
I'm feeling really great. I've been to Bangalore. In fact, I used to live in Bangalore back in 2007, 8, 9, 10. And I'm back to the city after almost 14 years now. And it's radically changed. One thing that has not changed definitely is the traffic. So I'm really happy to be back here.
Great having you here. Now Rahul, today the aim of this podcast is to sort of give people a takeaway on two lenses. One is investment, which is your forte, and insurance, which is ours. And we just want to sort of dig in and exchange a few things. Like we want to hear what insurance means to you from an investment perspective and what we feel about investment. Right, so we've seen your videos, and by the way, they're really great, and I'm personally a fan of your videos. You speak a lot on investment, money, how to grow your wealth. Now, straight away, getting to the question of what is your view on insurance? What has been your experience with insurance?
Right.
If you could run us down with what insurance do you have? When was the first time you purchased?
Right.
So we'd start there.
Sure. So back in 2009, I took my first insurance policy, term insurance policy with LIC. And I got that as soon as I got married. I think I made two sensible choices at that time. One of them was life insurance policy. And then we moved to London in 2010, right? So LIC, or for that matter, any insurance policies, I don't think they cover the, same T's and C's abroad. But I continued to pay for the insurance policy in 2011 as well as in 2012 because I was hopeful that I'll come back to India very soon because it was a short-term visit at the time. It ended up being 11 years in UK. Eventually in 2013, I realized that there's no point in continuing to pay premium now because this policy is void, abroad. So I had to cancel it. But then 2017 is when something big happened personally. My dad was diagnosed with cancer at the time. We didn't have any health insurance for my father and my mother both. Emotionally, it was very, very draining. I can tell you that. Of course, it will be for anybody, right? But financially also, it was such a drain at the time. First year of his illness, we had to spend around 20 lakhs, no insurance out of the pocket. And all of a sudden when things happen, I think I was not prepared for it, right? But luckily I had a corporate insurance at that time, Mindtree. I used to work for Mindtree at the time. And I could add my parents in the second year. So for example, first year when my father was diagnosed with the illness, I could not add him and therefore I could not claim any of the insurance. But the next year I could add him. So the next year's expenses, almost 80 to 90% of that was paid, right? I had New India Assurance. It's a government insurance company. Hassle-free payment is what I got. 80 to 90% of my claims were recovered. And I think at that time I really recognized the value of health insurance, especially in India where it could cost you fortune because abroad, you have very good government facilities, right?
Exactly.
Like in UK, you have NHS. There is a problem there in terms of the waiting period. But once you get into hospital, you'll be treated, you'll get a world-class, treatment facility. while in India you have to bear out everything from your own pocket, right? So I would say that was one mistake that we made at the time, that we didn't have health insurance for my parents.
Okay.
I think it was an oversight because my dad was, in late 50s and fit and fine, and you wouldn't really anticipate anything going wrong.
Correct.
But then that was the second, instance or our experience with the insurance. And then when I came to India in 2023, finally migrated back from UK to India, we took our medical insurance policy with Niva Bupa. And I continue to hold it because our neighbors recommended that policy.
Okay.
I did my research, a lot of research on insurance policies. In fact, I created few videos around it, right? But it was the reference. Many people I spoke to, many of them recommended that. So we sort of went ahead with that, not taking any chances any longer now,
Okay.
And yeah, I still hold it. So that's our experience. I think it's must have when it comes to insurance.
True.
Because that gives you that assurance that you can, take risk with your money now, because you are now insured for your health and your life. Therefore, you are likely to take more risks, be it investing in directly stocks, because that money then you don't need to worry about any sudden surprises coming your way, right? So
That's right.
for me, insurance is giving that cushion bed for me to then go a bit aggressive in investments, really.
Understood. We know how you're with your investments when I had a conversation with you. So yeah. Now, we all grow every year, right? And every time we do, we realize that, oh, if I went back in time, I would do this thing differently.
Right.
So is there anything that you would do differently with your insurance if you had a button to rewind time?
Definitely. As I said, one thing that I would definitely do is buy the health insurance for my parents, right? I think I started earning from 2000. So my first job was in 2005 before my MBA. And I would say anybody who's starting out their first job, first thing is to make sure your family is insured. It is so important, especially when you're starting your career. You don't have a lot of money with you, right? Because you're literally living on your salary. And I would say whatever you could save, the best gift you could give to your parents or to yourself is really buy a good insurance policy. And then whatever money you can then save, then world is open for your opportunities, equities, golds, forex. There is a lot, right?
Exactly. Beautifully put there. Now, there's this trend in India at least, and we recently did a video on why senior citizens should get health plan for themselves.
Right.
So while doing my research, I saw that 98% of senior citizens don't have a health plan, and they rely on a medical emergency corpus.
Right.
And I see that this trend just does not stay with the senior citizens, but there are a lot of people who don't solely rely on insurance, but also have a medical emergency fund at home.
Right.
Now, two parts to this question, right? The first one is, how much should that medical emergency fund be so that it is sufficient to cover them? And second, how practical is this to have an emergency fund versus an insurance?
I think I can answer the both questions in the same answer, which is that in my view, whatever number you want to build your medical corpus with, it's going to be less, right? Let's face it, because if you go with a 10 lakh rupees of number, right? What happens if God forbid, any of your family member is diagnosed with a big one, right? And you need to spend upwards of 20 lakhs, 25 lakhs, right? So I think replacing insurance with the corpus is not a very smart idea in my view, right? I don't know why people are doing it. If they are doing it, maybe they have got some other views, which I respect. But I wouldn't do it, right? I would every year pay the premium, right? And get the cover that I need for, right? And in fact, if you're doing it, right, if you've built a corpus of, 10 lakh rupees, the next question will be that, will that be sufficient 5 years down the line? Because the cost of medical is also increasing, right, in India every single year. And I read, 2022 to 2023, the data was around 12% inflation on medical expenses. So it's not going to get cheaper, right? So every year you will have to pour money into that anyways, right? So in my view, I don't think that's a very smart move. I wouldn't do that, at least. In my view, I'm just traditional insurance, buy your insurance policy every year. and whatever coverage you need, you just pay the premium for
Right.
that.
Let insurance do what it is
What
supposed
it
to
is,
do.
why are you becoming insurance company is the
Exactly.
question I would ask people, right? So,
Exactly.
yeah.
Now, right on that, uh, I'll just give you the situation, right? In most of the household, let's suppose this person has to get a health insurance for his whole family. Suppose the man has to spend 1.5 lakh rupees per annum
Right.
on the premiums for a health insurance, which covers his wife, his 2 kids, and 2 parents.
Right.
Now, 1.5 lakhs is a huge amount considering an Indian subcontinent. Now, how should one be factoring that amount while making their financial planning at the start of the year?
I think it's a mindset change more than anything else, right? Like we need bread, butter, we need a house to live in, right? Insurance is very similar to that, right? There is no rocket science here really, right? Just think about if you're paying, I don't know, 1 lakh rupees a year, right? How much you would end up paying in 20 years time? 20 lakh rupees,
Yeah.
right? But in that 20 years of period, if anything goes wrong with your family, which is totally under not your control,
Exactly.
right? That would cover everything that you would have put in, right? And I think maths don't work there, right? So what happens if let's say you start buying insurance, every year you're paying the premium. On the 4th year itself, you're diagnosed with an illness, right? And you need 20 lakhs. So where are you going to look up to, right?
Exactly.
So in my view, it's a mindset change that people generally are used to see the return on investment on everything. In fact, like I talk about return on investment all the time. We talk about risk versus reward ratios, right, in investment. And we will only spend money if we can see uplift of, I don't know, 20%, right?
Yeah.
Here, there is no money coming back to you. But what people are not realizing is that you are getting an assurance back on the money that you've invested in the insurance policy. And that assurance sets you free, right? Because now your health and life is taken care of. Now you are free to take a lot of risk, a lot of calculated risks with your remaining money, right? You could invest that in equities. Right now, stock market in India right now, I mean, it's in the bull run, right?
Yeah.
And it's been in bull run for last 1 year. People who have put in a lot of good money have gained a lot because you are now not worried about all of a sudden expenses coming from here and there. So there is no direct return on investment per se if you want to calculate, but it's just to cover for surprises. It's cover for something that is beyond your control. So it's a mindset change that people need to bring in to say, okay, every year I'm putting 1 lakh or whatever that number is, and there's a value to it.
Exactly.
Right. So yeah, it's just a mindset change really.
Congratulations on hitting 500K on
Oh,
your
thank you.
channel. And I saw that special episode that you released a month ago.
Right.
You had one of your subscribers who wrote to you that he was in financial trenches, and following up on a couple of advices that you gave him, he literally came out of it. And I see that there are a lot of 20-year-olds now who want to be very financially sound. That's the paradigm shift that I've seen. What, in your idea, are 2 or 3 decisions or steps that people in 20s need to take to be financially sound better than their peers?
Right. Okay. Just a quick correction, Shashank. The video that I created, the story of Bijoy, there was no advice I gave him.
Okay.
I think he was very bright. He came out of the poverty, and he's in fact written a few days back to me that he's built a corpus of 1 crore plus, and it was his personal story that I wanted the world to hear. Without any guidance, without any support. If he can do it, I think a lot of people can do it, right?
Exactly.
So that's great. But now coming back to your question around 20s plus. So I don't want to be sounding like a 60-year plus because I'm not. but having spent my 20s and my 30s as well, I think in 20s, the one thing that you could do is build awareness. When I say awareness, let me give you examples. Number one is income awareness. Okay. So if you want to be really financially good in your life, let's say 20 years down the line, 30 years down the line, rather than chasing one particular number in your 20s, what you really need to do is focus on income, right? And when I say income, I mean look at your career which can generate very high income for you. right? That should be your prime focus in your 20s, because the combination of your passion towards a career plus income, high income generating careers should be the combination that people need to look out for, right? It's not just about you're passionate about a career and whether it's making money or not, you want to do that. No, it's not going to be sustainable. Let me tell you that in your 30s, 40s, when you have a family, the expenses will go out of the roof. You would need a lot of money. And in 20s, you have that chance to explore, right?
Okay.
Explore a lot of career options, right? Do whatever mistakes you need to do, right? But ultimately, the hardest thing that people right now, I think, even in their 40s, are not able to do is find that sweet combination of your passion towards a particular career and that career generating a lot of money for you, right? This is where many people go wrong, in my view. But in 20s, if you can bring that awareness that your motto is not to earn crores of rupees in 20s, but your motto should be to set yourself up for a career that can generate a lot of money for you, plus it gives you sense of satisfaction. And this combination is very hard for people to find. And in my view, 20s is a very, very good time period between, early 20s or late 20s, where you can do experiments with your career, try out 2 or 3 things that may work, may not work, and eventually that is what you need to look out for.
Great, great. Personally speaking, from my experience, right, that satisfaction point that you said really, really makes a lot of difference. So I totally vibe on that. Now, speaking again on the 20s, fire for the whole world means a tool through which that you can cook something or you can light up something. But fire for us means financially independent and retire early.
Right.
Now, do you see that there is an upward trend in folks in their 25s and 30s that they want to retire early? So that's my first part. Do you see that there's an upward trend? And if yes, what is the practical timeline for these folks to attain fire?
Right. So definitely, I think because of a lot of content being put out around fire, many people have started to build their own targets. Right, they're in 20s, which is fine, which is not bad, but it's not practical in my view to get to fire by, let's say, 30 or 35 or even 40, right, for that matter. It's not practical at all because the incomes are limited, right? Expenses are going up every single year, right? And if you want to be becoming financially free by 40, my question to you will be the remaining 40 years of your life, if you were to live to 80 years, that's a very long period. And within that 40 years of time, all your assumptions can go wrong.
Yeah.
Right? Inflation might be of anything that you might not even imagine right now.
Exactly.
Stock markets may not be what they are right now, right? So there are a lot of assumptions that people make. So I think you just need to be really careful. And the other question I would say is that being financially independent is absolutely the right thing to do, which I myself trying to do. I'll be 47 by the time I get it, hopefully. But retiring early, I think that should be detached from being financially independent.
Okay.
Because why would you retire? I mean, like, what would you do? Like, will you go and holiday on a beach? How long will you do it for?
Yeah.
6 months, 1 year, and then eventually your brains will be dead, right? If you do that. So there has to be a plan that you want to do after you are financially independent. But it's it's not practical at all, like in 30s or 35. I've worked in UK for almost 11, 12 years now, have accumulated good sums of money. And I can tell you that even now, I'm not financially free. And there's a reason I've set my target to be 2030, because I know what it takes it to be financially free. People are throwing random numbers of 10 crores, 15 crores or whatnot. But the reality is that incomes are limited, right?
Right.
And the world is very unstable right now. You have to plan for instabilities. There has to be a margin of safety, right? You can't just look at your expenses right now and say, I just need 50x of my expenses. If I'm spending 12 lakhs a year now, and if I build a corpus of 12 lakhs into 50, which is 6 crores, then I'm sorted. No, of course not, right? Because there's still 40 years to go out.
Yeah.
So you can't really just take it easy. in that sense. But yeah, I think being aware of your financial situation is the most important thing, and striving for it is not a bad thing, but it's very, very immature, I would say, where people are planning for 20s or 30s. There may be exceptions, very handful of them, less than 1%, I would say, but majority of 98, 99% people wouldn't be able to get it in like even their early 30s, I would say.
Correct, correct. Really insightful, that one. Now, let's talk about the bread and butter of ours, that's investment and insurance.
Right.
People often mix this, and they make really bad decisions. At least that's what I feel, because either you have an insurance product or you
Right.
have an investment product. When you mix them, that's a formula of disaster,
Right.
according to me. And the such product that I'm talking about is endowment plans, money back policies, and ULIPs. Now, in your opinion, right, do you see that the current generation is slowly going away from these endowment plans, of these products that neither are good insurance products, neither good investment products?
Right.
So do you see that trend going away?
Definitely. I think the social media has helped people become more aware. And also, I think gone were the days when in 1990s or 2000, right, where you would see an agent coming to our house and say to your mom and dad to say, okay, take this policy, and after 40 years, you're going to get this much of money, and it also gives you cover. Because at that time, people were not using internet in India, right? There was very little awareness. Agents were just like giving you these policies left, right, center. It's no longer the case, right? People are now reading up, they're becoming aware, they are watching videos, they can make out the difference between good policy versus bad policy. So definitely the trend is towards people are now either going for the pure term insurance, right? And putting their money into mutual funds and all that. And until these products get improved, like endowment plans or ULIP policies, until they get really produce some value for money, I think they will die down very soon, because we are living in a very different world, and people are focused now in terms of what they're expecting out of a product. And if your product is not able to provide value for money, then you will not be able to sustain in the market, really.
You said of how people these days consume a lot of internet, a lot of knowledge, in fact, from social media platforms, from YouTube.
Right.
So they also make a lot of decisions based on videos made by creators,
Right.
even like the likes of you. So there comes a tag of responsibility for creators, especially financial creators,
Right.
who give out advices, who put out big numbers.
Right.
And people are in that race ki, हाँ मुझे 15 crore कमाने हैं, I need to get this much money. Now, there is a certain risk associated to it.
Right.
For the same very reason, the advertisements of mutual funds in the last, for 2 small seconds, they put mutual funds are subject to market risk. Please read all the scheme related documents carefully. That's the most important part, but that's the one that's hurried often. The same thing is what we strive at Ditto to make people understand, that please read your policies carefully, because you are responsible enough, you should be responsible enough to read your own policy, to know what is covered, what is not, what is going to help you during an emergency. So according to you, what are some onuses that advisors should take up, like the advisors at Ditto do take up, of being very sound in what they give, the kind of advices that they give once they compare the policies and how they give it to the clients? What do you think, what more can financial content creators do in terms of giving sound advices to people, clients and audience?
Yeah. I think what is happening, Shashank, right now is, if I ask you that out of 2 dishes, let's say I serve you veg biryani, right? And second is a khichdi, what would you go with?
Biryani any day.
Biryani, right?
Unless I've
Unless
had
you're sick,
yeah,
or something like that, right? So I think my point is that people are looking for masala, right? It's very simple. But when it comes to T's and C's and policies, the real problem is the presentation. Okay, there are people who don't want to read 100-page T and C's, right? I never do that myself,
right?
Because it is verbose, it is full of words. Words don't stick in my mind, but pictures do,
right?
Right? Stories do, right? So I think there has to be a shift if you want people to read about risks, the terms and conditions associated with it. In my view, it has to be picture driven.
Okay.
In my view, it has to be story driven. In my view, it has to be very simple language that people can understand. Like if you take an example of an insurance policy, now there are so many jargons in that which I would just like not want to read at all.
Exactly.
Even if somebody gives me money to read it, I would say no, just keep it with you, right? So it is to do with the presentation, right? In my view, and it needs to be made more relatable to people so that they can consume it, and then picture stories, they get stuck in people's mind, right? So that's what I would say. That needs to change if you want people to really take notice of the risks and the T's and C's. It has to be picture based. It has to be story driven.
Interesting insight on that. But let me ask you this question straight up. Are the markets overvalued at this point of time?
I think I'll try and answer that into two parts, right?
Okay.
Number one is that markets are overvalued or undervalued. If you ask the same question to two different people, you're likely to get two different answers. You might get three different answers from the two different people, right? Because everybody's assessment is very, very different when it comes to markets valuation. My view right now, if you ask me, is I remain extremely bullish on Indian market for a longer duration, right? And right now, if you ask me, large caps are fairly valued or undervalued, right? In fact, I created a video very recently where I talked about two simple metrics on valuations, PE ratio and PB ratio, most widely used and very simple for anybody to understand. And if you look at the PE ratio and PB ratio of large cap space, it's not very high, okay? If you look at the mid cap space, it's extremely high right now, okay? And if you look at the small cap, it is somewhere in between, right? So when we say market, what do we really mean by market? So if you're asking me, how's the mid cap space looking, Rahul? I would say highly overvalued right now, and the risk of correction is there, right? That's the biggest risk right now in mid cap space. What about large cap, Rahul? Fairly valued. You must invest right now, right? Likewise, if you ask me, banking, right? Banking sector right now is massively undervalued, right? Be it PSU banks, be it private banks, there are reasons for it, right? And those reasons may be legitimate, right? But that's what is all about in terms of risk. When you have certain reasons for a sector to not work well, and if you take bets at that time, you're likely to make money, right? Otherwise, if everybody is fearful, then you're not going to make money. So that's second part. Third, for example, I'll give you another example of PSU themes right now. PSUs have given more than 100% return in the last 1 year. If you look at the CPSE ETF index that I closely track, in the last 3 months, it's only gone up by around 4%.
Okay.
Right? What it tells me is that the sentiments towards PSU themes have slowed down in the last 3 months. And if one more quarter, like the next 3 months, go on the similar lines, then definitely there is a slowing down in PSU, right? So one is valuations, but also the sentiments in the market plays a vital role, right? And this is where, as an investor, if you can just see the trends in terms of where the money is being rotated in the market, and if you can just ride on that wave, you can make good money. But overall, if you ask me, I remain extremely bullish on Indian stock market, and I'll tell you, in the last 1 year, the 7 or 8 events that have happened in the market, be it Israel-Palestine war, interim budget in February, we had elections blip, we had full budget coming in, then we had Japan, interest rate crisis that came latest. SEBI came out saying small cap mein froth hai karke, right? When your regulator is saying all that, but still market is up, right? So market is able to sustain itself because there is a lot of DII's money involved right now. Quant is sitting on like 12,000 crore odd of cash. Now tell me, if the market is down by 3% in the next few weeks, I'm not saying it will be, but let's say hypothetically if it is down by 3%, what are these mutual fund houses are going to do? They're going to go and buy.
Buy it, yeah.
So they are not going to let the market fall by, let's say, 10 to 15 or 20% in my view, right? There is going to be huge buying at that time. So Indian markets are inherently right now stronger than ever, mainly because of earnings.
Okay.
Right? It's only the Q1 25 where the earnings have been slightly down, but if you look at the last 4 to 6 quarters, very strong earnings in India, and that is what is bringing investors across the globe into India really, and that's what is driving the markets up. So it's a long answer, I know, but I think just wanted to get to this point that markets are valued. Markets are overvalued, undervalued, depending on the pocket you look at, depending on the investor you're asking, and depending on the theme that you're looking at.
Exactly. And you've given me tons of things to go back and look up to. But let me tell you one thing that a lot of people that we speak to say, we will wait when the price of the term insurance comes down and we will get it then. So, one thing that they fail to realize is that insurance doesn't work like an investment where the prices go up and down. The best time to buy is yesterday, as you said.
Absolutely.
Now, I sort of want to ask you, how does the volatility of the price of these insurance mark up against an investment? So how does the volatility stack up?
I think in my view, insurance is a necessity. So you really can't really think insurance as an investment in terms of volatility, right?
Exactly.
If you want to buy food, you're not going to look at the prices. You're only going to buy tomatoes, right, when the prices are down. That doesn't work, right?
Yeah.
You need tomatoes to be used in your curries, right? You need it, right?
Yeah.
Likewise, insurance, you can't really wait for prices to fall down and think that as an investment. Investment is entirely different in terms of volatility. So yeah, I think it's a wrong comparison in my view. Insurance is insurance. You need it on a yearly basis so that you can be really sure of any surprises. And yeah, just look out for cheaper ones with the quality ones, and then you should be fine with that.
Great, Rahul. This brings us to the end of this podcast, and let me tell you, this was one where I learned a lot just sitting across with you. I consume your videos on a daily basis.
Thank you, Shashank.
This has opened my eyes a lot more, and I'm pretty sure that it's the same with you folks who are watching the video. So guys, if you like the video, please press the like button, comment if you have any queries, and we will get back. And as always, happy insurance hunting.